Looking from Switzerland into the UK, I'd have to say the UK's reputation for being a politically stable nation has taken a beating. Alastair McCaig, Fern Wealth. UK retail sales rose more than expected for the month of June. Now, Alastair, as we know, retail sales are fairly volatile figures, but can these figures give any positive indicators on increased spending from UK shoppers?
Well, I think when we think about specifically UK retail sales figures, it's certainly a major factor in the stability of the economy has been how solid retail consumption has managed to be maintained over what has been a pretty precarious 12 to 18 months following the revelations in regards to Brexit. That being said, the bigger issue in the background is probably the real inflation figures as far as the spending power of the UK is concerned, and the lack of any real growth as far as average hourly income is concerned. And I think all of these factors put together mean that certainly the solid UK retail sales figures we've seen this month are encouraging, but by the same token, I don't think it's a barometer with which we would put too much weighting as far as the longer term outlook of the UK economy is concerned. Solid, but by the same token, only encouraging, and not really a real reflection of where I think the major headwinds are going to be in the months ahead.
Groups of British and EU officials have been meeting this week for Brexit talks. All progress made over summer months will be closely watched. But are we seeing the Great British Pound and the euro remain notably affected by these ongoing discussions?
Certainly David Davis has come out of these second round of negotiations with the EU talking in positive tones about what has been achieved. I think when you consider the volume of major issues that need to be tackled, this is maybe more of a soundbite than anything else. And it's worth realizing that the EU's Minister, Ms. Barnier, has maybe not poured cold water on these talks, but is certainly a little bit more reflective in his enthusiasm. I think the major issue still remains the fact that the UK hasn't necessarily got a unified point with which it stands on many of the major issues, whereas the 27 nations of the EU seem to be pretty unified in exactly what they're looking to achieve here. And we are already 4 months into a 24-month time period, and as Mr. Barnier says, the clock is ticking. I think the fact that the UK went to the polls has, in reflection, been a major disappointment and effectively wasted time that could have been spent in negotiations, or if nothing else, formulating a more solid opinion with which to work from. At this point in time, looking from Switzerland into the UK, I'd have to say that the UK's reputation for being a politically stable nation has taken quite a beating in the last year and a half. And to date, it looks very much like the EU will hold the upper hand due to the fact that they do have a more unified opinion and stance, and the UK at this point in time has a fair amount of catch-up to do in order to readdress the balance in negotiations.
The ECB left their interest rates on hold for the 12th consecutive month, as Mario Draghi attempted to calm the markets with a fairly dovish message, soothing markets on the topic of a strong euro. Is European inflation still the big issue here?
As much as Mario Draghi, the European Central Bank President, tried to maybe temper enthusiasm for when changes might be afoot, I think the statements from the months previous in Portugal have certainly set the tone as to where the FX markets and more broadly that the financial markets are now looking. There does seem to be the initial steps of change as far as shifting the whatever it takes mentality that the European Central Bank have had in years gone by into a more rate normalization mindset. That being said, all the phraseology that came out of today's speeches from Mario Draghi were very much that they would continue to ensure that the 60 billion euro monthly budget is in place, and that timeline could be extended for as long as is needed. And that certainly set a calming tone, but it does very much feel that mentality on a global basis has shifted to the European arena in a more positive light. There's been many political hurdles that have had to be cleared this year, and the EU, broadly speaking, has managed to clear those with some comfort. That we still await what will materialize as far as Germany is concerned, but arguably that was always going to be one of the regions that was least likely to cause fluctuations and problems for the EU. On the back of that, we've seen a pretty decent move as far as euro-dollar is concerned, breaking above 116 and looking very strong. And also, as far as we're concerned, watching euro-Swiss franc, this is an exchange rate certainly we at Fern Wealth believe is set to head higher. And that has certainly ticked up over the course of today, and over the last month and a half is up a good 2.5%. I think that 6-month targets and 12-month targets up above that 115 level as far as euro Swiss franc is concerned look eminently achievable. And we've certainly seen the confirmation of support for the Eurozone also in the equity markets as well. There's been a continuation of fund money out of the US and into the European equity arena, and that looks to be solidified by the commentary we've seen from Mario Draghi in the European Central Bank today.
Well, Alastair, thank you for your insights. That's all from me, but we'll be back on Monday for our next instalment, so see you then.